We are now in part 2 of the Introduction to Bookkeeping course, and in this part 2 we'll go through chart of accounts, 5 major accounts, and debit and credit more in details. We will use DALER to simplify our debit and credit transactions. And without further ado, let's get started. As you recall, in previous part 1, we have discussed the simple concept of double entry and also true and fair review of transactions and reporting. In part 2, we will continue discussing debit and credit and double entry for all transactions. Every business transaction needs to be balanced, and it has minimum of 2 accounts. The way accounting software, it's the same as it would be recorded on the paper, as a debit on one side and credit on another side. And 2 sides need to balance. So if you had 1,000 on one side, you should have 1,000 on another side. We had an example with sale, and we said we sold goods on one side and received cash on another side. Something new in this part 2 is that every business transaction is based on common indexing. And chart of accounts is common indexing for all accounts that we use. Let's have a look more in details. Indexing is the structured way of presenting all accounts related to the business transactions, and it always reflected according to 5 major accounts in accounting and bookkeeping, such as income, expenses, assets, liabilities, and equity. The best way I can describe it to you is if you imagine the structure of the tree, and you have expenses, income, revenue, liabilities, assets, and equity as the branches of that tree. Each expense will have their own little branches going through, and it could be travel expenses, rent of the office, telephone and broadband, and so forth. You may have income and revenue as a sales account. You may have liabilities, assets, and equity, and all of those may have their own little branches going forward. We will look more in details about branches, also called branches, later on. But it's very important to remember the indexing of all nominal accounts is called chart of accounts. Let's have a look at the example. Here we have a chart of accounts of demo company from a software called Xero. And as you can see, the list is really big. However, you don't have to remember all of this. And also you don't have to make up if you already have a template available to you. You can add new accounts if you need to, if they're missing. But generally, QuickBooks or Xero, they're pretty good in guessing the accounts that you need. So for instance, we have said that we have 5 major accounts, and one of them could be sales. Another one could be expenses, which is overhead. As you see, current assets, which relates to assets. But don't worry about this, we will cover more in details in the next section. Most important concept here is to understand you have 5 major accounts: income, expenses, assets, liabilities, and equity, which will be represented in the chart of accounts.